Good afternoon, everyone. Thank you for having me here, and thank you for your attendance. As Sam said, I think what I wanted to spend a bit of time on today was really just helping you understand how we perceive the opportunity for companies thinking about inwardly listing on the JSE. So whether you're in the audience from a corporate who may be thinking about this, or you're an advisor who may have clients for whom this might be relevant, what I'm hoping to do is keep this relatively simple, but leave you with, I guess, 4 principal takeaways as to why we think an inward listing on the JSE has merit. And what we'll do is we'll run through a bit of a snapshot of the South African institutional landscape. So helping you understand, I guess, what is this distinct pool of liquidity that a listing on the JSE helps you attract? How big is it? How deep is it? How sophisticated is it? We'll then talk a bit about primary market activity on the JSE. And I think here what we'll really try to highlight is that the cyclical downturn we've seen in terms of domestic ECM activity creates an opportunity for inward listings to step into, I guess, the lack of supply that we've seen, and take advantage of the liquidity that does sit within South Africa that is looking for a home. Linked to that, we'll talk a little bit about the global delisting trend, how the JSE has been impacted by that, and again, how we think that creates an opportunity for foreign issuers. And then, without going into too much technical detail, we'll talk a little bit about the process, really just to give you comfort that it's actually a very straightforward process. I think you've heard a couple of times already that AB InBev was able to list in 3 weeks. That was a transaction that Standard Bank was involved in. And I have to say, it's a very straightforward process. And we'll talk a bit about that and perhaps a few kind of headline recommendations for anyone that is thinking about such a listing and how you make it as successful as possible. So hopefully you can see this clearly enough. But maybe let's just start with a bit of an overview of the South African institutional landscape, because this is the pool of liquidity essentially that a JSE listing would allow you to access. And there's probably a couple of points to make. The first one is it's a very deep and broad and vibrant pool of liquidity. In terms of the size of assets under management, we're talking about a pool of liquidity that is far in excess of South Africa's GDP. And that's unusual in the context of most capital markets of any relevance on a global basis. And that is essentially the liquidity that is available to tap. We've summarized the top 20 institutional investors. This excludes the government employee pension fund, but essentially what you'll see there is that it's a relatively contained universe. Essentially, if you're speaking to the top 20, frankly, if you're speaking to the top 10 institutions, you're speaking to most of those assets under management. So if you're thinking about the complexity of a secondary listing and the extra effort that you'll have to go through from an IR perspective, then actually the good news is that it's a relatively contained universe that you need to invest time and effort in. What I would finally say on the institutional market is that these are very sophisticated investors. They're used to investing capital globally. You've heard of Reg 28 and the foreign ownership allowance. Deanne talked a bit about how much of these institutions' funds are invested offshore. So they do understand, equities in a global context. And, I'm reminded of a comment that Ivan Glazenberg, the former CEO of Glencore, made when he was at the JSE listing event in 2013. He said he'd gone on a big, expansive roadshow with South African investors. Obviously, he's very used to seeing investors globally as CEO at that time of Glencore. He was convinced that the quality of conversation and dialogue he had with the South African investors he was meeting as part of that listing event was as good as any conversation and dialogue he was having with investors in any other location, whether it was the UK, the US, or elsewhere. So these are going to be very additive, stable additions to your shareholder base if you contemplate an inward listing and attract these investors onto your register. Final point to make is just why is this a dynamic that is relevant? And again, you've heard of Deanne talking about the foreign ownership that domestic investors have outside of South Africa. South African investors operate under exchange control restrictions, and essentially what that means is that 45% of their funds is the maximum they can deploy outside South Africa. So what that means is that for every single institution that we're talking about and that we've put up on the slide, there's an underlying sense of frustration about their inability to introduce as much diversification within their portfolios as they would ideally like to introduce. There's obviously a limit in terms of the geographical diversification that they can bring into their portfolios by virtue of 55% of it having to be invested locally. And there's obviously therefore a limited sectoral diversification opportunity as well. All of this means that for any new listing, whether it's a domestic South African listing or it's an inward listing, there is very strong structural support. Inward listings have the additional benefit, obviously, of being able to deliver that geographical diversification without investors having to eat into that foreign ownership allowance. So what we've seen with inward listings over the last dozen years or so is a lot of interest simply by virtue of this diversification that candidates can offer. So if we move on to the next, key message, which is, why we think there's a real opportunity right now. Worth spending a couple of moments just on primary market activity that we've seen on the JSE over an extended time period. And I guess what you'll see here is that certainly from 2019, the reality is it's probably from about Easter 2018, we've had a dearth of primary market activity on the JSE. A large part of that a function of underlying economic headwinds, obviously some big macro headwinds globally, such as COVID. And you'll also see that in this period, there's only been one IPO of substance. And I guess what I mean by substance is an IPO that's raised R1 billion or more in that period. So you've had this structural lack of supply of issuance, a structural lack of new listings on the JSE, but now at a point, again, as Deanne has spoken about, where there is increasing risk appetite, increasing appetite to put money to work in the equity market. And we think that creates a really attractive opportunity for not just domestic South African companies thinking about listing, but foreign companies thinking about accessing the South African institution investor base through an inward listing on the JSE. The final point I'd perhaps make on this side is with a nod to the bottom half. IPOs obviously have to deliver returns for investors, and by and large, the companies that have come to market over the last 10 years or so have generally done that, certainly on a 1 to 3 month basis. And what you won't see from this table is the fact that South Africa has been, certainly since the financial crisis, so when the IPO market reopened around 2010, in our view, it's been the most defensive IPO market of any capital market of relevance globally. Certainly in those early post-financial crisis years, you found many countries suffering from IPOs launching and failing to price. Since 2010, I think we've had 3 or 4 max companies on the JSE that have launched an IPO and failed to price. And the reason for those failures has actually been very company specific rather than market led. So again, speaking to this natural desire for diversification, it's a very supportive environment for companies thinking about listing, whether they are domestic listings or inward listings. And just to drill down a little bit more into this kind of this point I made earlier about lack of IPO deal flow, That lack of IPO deal flow has also coincided with, I guess, what we've seen as a global trend, which is a general kind of trend of delisting activity. And what you can see in the top charts on this slide is that we've had a steady drip feed of net delisting activity over the last 8-9 years or so, with the net result that if you look at main board constituents, we've seen about a 25% contraction in the number of listings on the JSE. So again, you've got a market, an institutional market that's desperate for diversification, hasn't had much new listing activity to invest in to deliver that diversification. And at the same time, you've had a shrinkage, if you like, of the investable opportunity on the JSE. You'll see some of the IPOs that have come to market, and they've been very good, successful IPOs. But none of these companies, whether it's Discount, Pepco, Premier, or hopefully Boxer, which we launched this week, none of these have got a market cap that can offset the market cap that's been lost through the delisting of the likes of Imperial, Massmart, Distel, and the like. So another reason why we think that there is this natural support at this point in time for prospective new issuers thinking about listing on the JSE. So I guess if I've done enough to convince you that there is an addressable audience of value to you or to your clients on the JSE, maybe a few words just on process and how we think you can best achieve all that you want to achieve through the listing. So again, we talked about ABI a few times today already. They had every intent of trying to kind of break prior records in terms of the speed with which they could put their listing on the JSE in place. It was done in 3 weeks, and I think the JSE should be commended for the speed with which they were able to support that listing process. Recall that was in 2016, so before some of the fast-track listing rules that we have today were necessarily fully bedded down. What we'd generally kind of suggest is, if you're thinking about this, then obviously start to think about engaging stakeholders, appoint advisors as early as possible. But certainly, within, we'd say, kind of 6 weeks of your planned listing date. That's really designed to make sure that you get all the regulatory approvals, the regulatory support in place in a timely fashion. And then 3 weeks before you intend to list, would recommend starting to work on the only document that you need, which is a pre-listing announcement. And that's a relatively short document. Now, the reason that's the only document that you need is because provided you're listed on a recognized exchange and on the main board or not on the junior exchange of that venue, then the JSE will essentially rely upon the pre-existing disclosures that you have as a listed company through your primary exchange. So no need to produce prospectuses, no need for incremental disclosure of historical financial information, because it's understood that that's already in the public domain and investors can access that freely already. And then the only really kind of fixed portion of this timeline is that pre-listing announcement simply needs to be released on the JSE's newswires 5 business days before you start trading. It's a very quick and simple process, not a particularly costly process, both in terms of time and fees. And what I should add is that if it's an easy process to list, it's a very easy process to maintain that listing going forward as well. Again, provided that you're listed on a recognized international exchange and on the main board of that exchange, then essentially your ongoing obligations will be dictated by that primary listing venue. And the only real commitment you need to make to the JSE is that you will disclose information simultaneously on the JSE's news service as you do on the primary listing newswires, and that if you're undertaking any corporate action, there should be some consultation with the JSE just to ensure that the corporate action timetable is aligned. So a very straightforward process to list and on an ongoing basis. Finally, before we perhaps open up to Q&A, I guess there's a few things that we'd recommend for corporates to think about in terms of managing this process if there's a commitment to proceed. And this is born out of experience of bringing a number of these companies to market. The first one is stakeholder engagement. Now, stakeholder engagement, I'd define as engagement with regulators, not just the JSE, but with the Reserve Bank, just to make sure that your application to list is going to be straightforward to approve. This is particularly relevant if you're planning on raising any capital through the listing and intending to externalize that or take that money out of South Africa and deploy it in your home market. So important to start that stakeholder engagement early, particularly, like I say, if you're looking to raise capital. It's then going to be important to invest time in educating investors. So contained universe, we talked about in terms of the audience that you'll be looking to get excited about the listing, but do take time to engage with them. We've talked about the speed of listing, but to get full effect, we'd certainly recommend thinking about starting to have conversations with those investors 12 months or so before you plan to list. This can actually be something that you undertake as a way of testing whether or not the listing is going to work for you. So we've had that with a number of clients who, have wanted to understand in practical terms whether the theory, if you like, is going to be met or matched by reality. And they've undertaken roadshows, sat in front of investors, and understood the extent to which there's real appetite to invest in their stock. And through that process, obviously, they get a very good sense as to whether or not there's a deep appreciation for their story and whether the listing is going to work in terms of helping them access capital. And on that point, the final recommendation is to think about liquidity. So when we listed Glencore in 2013, they didn't need to raise capital. They thought they were big enough for South African investors to essentially go and buy stock in London and move it onto the JSE. To some extent, that was true, but only about 1% of the register ended up sitting on the JSE register 18 months post that listing. And it took a capital raise of about $2 billion 2 years after their listing for that domestic South African ownership on the JSE register to really pick up. So if you're thinking about this, then our recommendation would certainly be to think about the timing of it in relation to your capital needs. If you can time your listing with the provision of liquidity, and some of that liquidity can be, if you like, a portion to the South African investor base that we've talked about, then we think that sets you up for maximum success off the back of the listing. So I guess 4 key takeaways. What does a JSE listing offer you? It offers you access to a distinct, broad and deep pool of sophisticated capital. We think right now there's strong structural support for such listings. And we think it's a very highly efficient process, both to get the listing done and beyond. And then finally, I wouldn't be doing my job if I didn't just finish off with a brief advert for Standard Bank, really just to, I guess, contextualize how we think we can help in this process. We've got the most experienced team sitting in Johannesburg from an ECM perspective. We've been fortunate enough, if you include the Boxer IPO that's launched this week, fortunate enough to have led or be leading 9 of the last 10 IPOs that have raised R1 billion or more on the JSE. We've also got a team sitting in London who can help corporates sitting in London think through this a bit more. And we really think we're a safe pair of hands to support you, or at least as a first step to spend more time helping you better understand this opportunity.